Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Happy Monday, happy new week, and I do hope we all had a wonderful weekend out there. I'm so excited to be with you here this morning, but before we get started, let's run through our daily routine by confirming that we are all good to go here. So if you can see my screen, you can hear me loud and clear. Please let me know in the comment section by typing hi in the comment section. So I will look forward to your feedback so that I can also confirm that we are on the same page, and then we shall be diving right into the business for today. So I would like to see your feedbacks in the comment section. So what do we have here? Okay, I can see 5393 7043 NJ Can 00. Good morning to you. Thank you very much. 81207 9815. Thank you very much. 66227 9364 979. And hello Carrie, good morning to you. Thank you very much. Gwenal, I hope I pronounced that correctly. Good morning to you, and thank you very, very much. So it's on this note, I will take this as a positive feedback that we are good to go this morning. So once again, I welcome you all to yet another promising edition on the X-Trends Being Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your anchor as I take you through on a trading journey where we shall be dissecting the current market structure using simple parameters such as trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement of these assets we'll be looking at this week. So in preparation for this week, I have conducted a comprehensive analysis on a handful of assets for this week. And since today is the first trading day of the week, I encourage you to submit in the comment section whatever assets or financial instrument you want us to look at for this week, be it cryptocurrency, currency pairs, commodities, whichever case it may be. Drop them in the comment section, and trust me, I will be including it into our plans for this week, and this will be one of the assets that we are going to be monitoring this week. So if you have any, feel free to let me know in the comment section. Well, personally, I have 4 assets I want us to be looking at this week. I've already done something on the USOILSPOT, the USTech100, popularly known as the NASDAQ, the GBPUSD, and of course the XAUUSD, all of which we have a simple setups we can use to guide our decisions for today. For those who are joining us for the first time, you're highly welcome on board. Glad to have you around, and I am excited to have you with us this morning. And you might be asking, what is it that we do here? Well, as technical traders, we gather here on a daily basis in anticipation of the New York session, where we come to review our existing positions, if we have any, and then use the information we have on the chart to strategically position ourselves for the New York session. We do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time, and I encourage you to stay tuned in and be part of the subsequent editions, as the more time you spend with us, the better you get in understanding how this works, and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, I welcome you all on board. Now, with that being said, here we shall be diving right into the business, and as usual, the first thing we normally do is to check on the economic calendar, as we all know how these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to strategically position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. So for this week, and based on the asset I have, we are going to be focusing on high impact economic events from both the United States and the United Kingdom's economic docket. Well, for today, Monday, October 9, we do not have any high impact event to look forward to. So what I did here was to include the medium impact event, as this will also give us an insight into the fundamental factors that majority in the market are likely going to be looking forward to make a decision for today's trading session. Now, the first couple of events here are speeches. The first one is coming in from Logan. Logan is the President and Chief Executive Officer of the 11th District Federal Reserve Bank of Dallas, and is going to be giving a speech in about 3 hours from now. So everyone will be looking forward to what he says. We also have the first Jefferson speech. Philip Jefferson is a member of the Board of Governors of the Federal Reserve System. Then later on today, we have from the United Kingdom a speech from Dr. Catherine Mann. She is a member of the Council on Foreign Relations and the American Economic Association, and she's also a member of the Monetary Policy Committee of the Bank of England. So you see, one thing about these speeches here is that they are very, very important events that we want to be looking forward to, as it holds considerable influence over financial markets. Their remarks provide us insight into their central banks' outlook on their economy, potential policy shifts, and interest rate decisions, hereby impacting our trading decisions and, of course, market sentiments. Then later on today, we have the BRC like-for-like retail sales coming in from the United Kingdom. And for those who don't know what the LFL is, it represents the percentage change in sales of retail stores that have been trading for over a year, providing us with a crucial measure of a retailer's organic growth over the course of the month in, month out. Now, generally speaking, a high reading is considered as positive, while a low reading is considered as negative. Now, from what we have here, the previous data here came in at 4.3%, and consensus are projecting 3.1% for the month of September, which is a sign that everyone is expecting a contraction, which doesn't look promising for the pound sterling at this point. So we're also going to be looking forward to what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? Now, one thing we are going to be doing here as technical traders is to sniff through the current market structure to look out for patterns and structures that we can use to position ourselves ahead of this event. Now, we all know by now that even the anticipation of this event alone has a tendency of influencing price action, hereby evolving into a structure that we can use. Now, talking about price action, let's scale into our first asset for today, which is of course going to be the US All Spot. Now, on the US All Spot, I already had the position triggered this morning, but before we go into the details or how I come to taking the position I have here, well, I would like us to scale up into the daily time frame so that we can have an holistic perspective into what is really going on in this market. Now, the first thing I did here on the daily time frame was to take into consideration the nature of price action since the month of July. And if you look at the structure closely, you will see that price action had consistently and uniformly, of course, found higher highs and higher lows. And if we connect the series of higher lows, here we have an ascending trend line to work with. As you will see here, price action had consistently respected it to emphasize the strength of the buyers in this market. However, something interesting happened last week as we saw price broke down this ascending trend line for the first time in the last couple of months to emphasize the potential that we could witness a momentum shift anytime soon. Then in addition to this structure here is my key level for the week, which is going to be situated along the $80.60 level. And in fact, if you look at the structure going to as far back as last year, September, you will see how this level or zone, if you want to call it so, has played a major role in determining the direction of price action. Now let's go to as far back as this September last year. We saw how this level was serving as a buying niche at some point, as you will see right here, even till the month of October last year. It was serving as a buying niche for participants in this market. Now, until November last year, we finally saw the breakdown of the structure, and since that moment, price action had remained below that level to emphasize the strength of the sellers in this market. However, something remarkable happened in the last couple of months between the month of August stroke the early days of September, where we finally saw the breakout of this level to give us a new high. And with the way things are going based on what happened last week, you will see right now the price action has gradually transitioned back into where the structure, the key level is, retesting it a couple of times before some bullish gap was observed here. So with the information you gathered here, you would agree with me that we are at a crucial moment in this market where, depending on how price reacts to this area after the breakdown of that ascending trend line, will determine what our next line of action will be. Now look at the structure we saw here after the breakdown of the ascending trend line. Price immediately, as soon as it tests that key level at the $80.60, we saw some buy pressure leading into the bullish gap. Now the question going into the new week is, will price come back to retest the structure, the ascending trend line, and of course the $86 area, where the continued selling pressure will welcome a downtrend scenario, or are there chances that buyers will break above the $86 area to incite an uptrend move? Now, with the current information we have here, let's scale down into a much more lower time frame to see how to capitalize on a potential opportunity from here. And I think I went into the 4 hours time frame first of all. And on the 4 hours time frame here, you'll see we have a simple setup to work with. The first thing I did here was to consider the nature of price action since the beginning of this month, and you will see price had consistently found lower highs, giving us a beautiful descending trend line to work with for today's trading session, for this week's trading session, of course. And you know how we use our descending trend line in this community. As long as price remains below the descending trend line, we shall continue to hold on to a bearish bias, looking out for structures and patterns that support the idea of selling that asset. And we are not going to be buying unless the trend line is breached, that is, broken to the upside. Now, with the way things are going right now, price still remains below the descending trend line, making it look a little bit more bearish. Now, last week, Thursday and Friday, we saw price confined within this range here between the $82.25 level and the $80.60 area to emphasize the level of uncertainty at that point in time. And of course, you know how we do it in this community. When price falls into a range like this, we want to exercise patience, waiting for either the breakout or breakdown of that range to give us an opportunity to trade. However, with the way things are going right now, we have a bullish gap. That is, technically, price action has broken out of the resistance line of that range. Now, will price come back to retest the structure to incite an uptrend move, or will price continue to drop to the downside? Now, to guide our trading decision for this week, we want to see how the market is going to be reacting to this trend line. So we have a trend line right here where price has been trading around that structure since the beginning of this week. So we want to see how this structure is on a much more lower time frame to decide if we are likely going to be seeing the breakout of that trend line, or price is going to respect it one more time to push price to the downside. And in that regard, we will be scaling down into the 1 hour time frame where we begin to see things more clearly. Now, right here on the 1 hour time frame, while I was trying to dissect what is likely going to be happening today, this is what I was able to come up with. So you can see right here that price was initially confined within a range between the $86 level and the $84.35 area to emphasize the level of indecision at the beginning of this week. And of course, we want to see price either break down the support line to give us selling opportunities, or break out of the resistance line to give us buying opportunities. Now remember that price is still oscillating just right around that descending trend line we identified on the higher time frame. Now, with the way things are going right now, I witnessed the breakdown of the support line here, which triggered my first sell position for the week. And currently, I'm still in a sell position with the hopes that price would retrace into any of the structure for an uptrend move. But the way things are going right now, price is back into my entry point here by bringing in some level of uncertainty at this point. Now, what we are going to be doing here, if you had missed out on that opportunity, then I will suggest that you position yourself below this level here at the $83.80 level to join the downtrend continuation here. So let me mark this level out on the chart. You do also want to be marking this one, as you will be needing it as a reference point. So if you had missed out, a breakdown of the structure should be welcoming more selling opportunities at this point. However, if price continues to remain above this descending trend line, then that means that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, in this case scenario, I want to be looking at buying opportunities at the breakout of the $86 area. That is price taking out all the sell positions there. Remember, during the early hours of today, we saw a sharp rejection of that level by the sellers. So I want to see price take out that buy position for me to feel comfortable buying the US All Spot. However, there are chances that we can actually join a bullish momentum even before the breakout of the $86 level happens if we can observe or notice a series of higher highs and higher lows within this channel. Then we can actually join, then have a buy stop order above the $86 area to capitalize on that uptrend scenario. So in this case scenario here, let's see how the market will play out. A breakout back above this descending trend line, retest of structure, continue higher highs and higher lows, we can join an uptrend move, then add more positions at the breakout of the $86 level. So that is how we are going to be managing our positions on the US All Spot for today's trading session and for the first half of this week. This trend line here is going to be playing a major role, so you do want to be marking it on your chart, and of course that range between the $86 level and the $84.35 area. So these are my views on the US All Spot for today. If you have any questions regarding this current setup, or you need me to do some further clarifications, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's session. All right, all right. So, in the absence of no questions, I want to assume that we are all on the same page here. So, with that being said, we shall be moving into the next asset on our watch list for today. Sorry. So the next asset on our watch list for today is the USTech 100, which is popularly known as the Nasdaq. Well, Nasdaq did pretty well for us in the last couple of weeks. We've been doing very, very well on Nasdaq, and we are going to be doing a follow-up detail on the ideas we talked about here last week. Now, for the sake of clarity, for those who are not part of our live session last week, I will be going into the higher time frame today so that we can first of all refresh our memories, and of course, for those who missed out on our previous sessions, can be on the same page with us. Now, the first thing we did last week was to run through the daily time frame where we were able to have an holistic view of the trading activity since the beginning of this year. And if you look at the structure closely, you will see that it is obvious that price has been on a bullish trend. And after connecting the series of higher lows here, we have this ascending trend line which buttresses the strength of the buyers in this market. Now, just like what happened on the US All Spot, we saw here that during the mid-month of September, we witnessed the significant breakdown of that ascending trend line for the first time this year to incite a bearish move back into our key level at the 14,550. I hope we all remember this key level we identified here last week at the 14,550, a level which had played a major role for buying power in this market. Now look at what happened since price broke above the structure in the month of June. Sellers have struggled to break through that area. Every attempt by the sellers to break through has been met with strong resistance from the buyers at every instances. Now, in the last couple of weeks, we saw multiple attempts by the sellers to break through that 14,550, but all attempts failed, as you will see, buy pressure resume at every point in time. Now, with the way things are going right now, it appears we're beginning to see something like a reversal pattern. So if we take into consideration the breakdown of that ascending trend line, you will see our price appear to have transitioned into what looks like a reversal pattern. And whenever we identify such reversal patterns like this, the next thing we want to be doing is to identify the neckline that will help us validate the reversal pattern. And interesting enough, we have the 14,850, which happens to have been broken during the course of Friday's trading session, as you will see here, hereby validating that reversal pattern, as you will see here. And from a technical standpoint, when price breaks out of the neckline, we expect at a point in time price will come back, retest the structure to incite an uptrend and confirm that reversal pattern. Now, with the way things are right now, price has broken out and it appears it's retesting the structure. So what we're going to be doing now is to scale down into the lower time frame to see how participant has been reacting to that neckline around the 14,850 to decide if we are going to be joining the uptrend, hereby validating this reversal pattern. And before we scale down, where will the TP target be for this reversal pattern? Well, we have a zone to work with right here. Remember, we had the breakdown of the ascending trend line right here. That is one scenario. Then secondly, we have a descending trend line after connecting the series of lower highs. And technically, when price breaks down an ascending trend line like this, we expect at some point in time price may come back, retest the trend line that was broken, which interestingly in this case scenario shares a beautiful confluence with that descending trend line to incite a downtrend move, and if possible, a breakout retest of structure will welcome more buying opportunities here. So our TP target at this point should be anywhere around the 15,450 and the 15,250 area, which lines up with that descending trend line, and depending on how price reacts to the structure will determine if we are going to be adding more buy position or getting ready to join a downtrend move. Now, with the information we have gathered here, let's scale down into the lower time frame to see how the market has been reacting to that 14,850 level. Now, scaling down into the 1 hour time frame, this is what I was able to come up with here. Now let's look at the structure since the early hours of this week. So hold on a second. I want to allow this 14,450 to be within the screen. I think this is better. So we have the 14,850 just right here. So we are right around the neckline, and in fact, since the beginning of this week, price has been oscillating around that neckline to further emphasize the importance of the structure. And in that regard, we have price confined within a range that is between the 14,900 and the 14,850 to emphasize the level of uncertainty around this area. And of course, you know how we do it in this community. Whenever price action falls into such a range, we have no other choice than to exercise patience, waiting for either the breakout retest of the resistance line to give us an opportunity to buy, or the breakdown retest of the support line here to give us an opportunity to sell. Now for this week, we have the 14,850 serving as our key level, which is of course the neckline we identified on the higher time frame. Now if price, you know how we use our key level in this community. When price remains above the key level, we look out for structures and patterns that supports the idea of buying, and if price drops below the key level, we look out for patterns and structures that supports the idea of selling. So everything is lining up in a beautiful way right now, making it a simple setup to watch out for. Now if we are going to be selling the USTech 100 today, then we want to see price drop below the key level and the support line at the 14,840, retest of structure probably to incite a downtrend move. So if this happens, we hold on to a bearish bias and look out for selling opportunities. However, if price continues to climb up, and then remember price is currently retesting the neckline of the reversal pattern we identified on the higher time frame, then a breakout of the 14,900 will be all we need to capitalize on an uptrend continuation. Now if price continues to climb up, we have another level above the, what's it called again, the $15,000 mark, a very strong psychological area right there that we can use to maximize the potential of this bullish momentum if price continues to break above that level. So let's see how the market is going to play out from this area. Our center of focus for today is basically between the 14,900 and the 14,840, which you duly want to be marking on your chart right now, as you will be needing them as a reference point to guide your independent trading decisions for today. So I don't know if you have any questions as regards to my explanation. If you do, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. We'll be taking the next 10 to 15 seconds off to see if there are any questions, and you can use that time also to mark out these levels on your chart. All right, I see your comments, Sergio. Good morning to you. Kiari, good morning to you. Glad to have you around. Um, I see your face. Okay, 682 is asking how to make money without deposit. Oh, what an interesting question there. Thank you for your questions. I do appreciate that. All right, so in the absence of no questions here, I want to assume that we are all on the same page. So we shall be moving right into the next asset on our watch list. Oh, sorry about that. I never knew I was off. So, the next asset on our watch list is the GBPUSD, and of course, on the GBPUSD, we have an interesting situation going on right now on this chart, as you will see right now. And I already have a sell position running actually, which I've moved my stop loss to break even at this point. But before we go into the details of what is really going on here, I would like us to have an holistic stand perspective into the current market structure, and to do that we will be scaling up into the higher time frame. And this is a follow-up detail to our analysis for last week's trading session. So this week I will be looking at the 4 hours time frame, where I was able to identify a simple setup that we will be using to guide our decisions for today. Now, on the 4 hours time frame, what I did here was to take into consideration the nature of price action throughout the month of September, and of course you will see that price action has been on a strong bearish move. And to buttress this, we have a beautiful descending channel here. So what I did was to connect the series of lower highs, which gave us the resistant line of this descending channel. And then after connecting the series of lower lows, we have the support line of this channel. Now, this is where things become very interesting. Now, if we zoom into what has been going on here in the last 2 to 3 weeks in this market, it is quite clear that price had been confined despite the strong bearish momentum. Please take note of this. Price has been confined within a range between the 1.22650 and the 1.20400 area to emphasize the level of indecision at this point in time. And it appears price action is gradually transitioning into a reversal pattern, though it's not yet confirmed yet, but it's looking more like a head and shoulder pattern sort of a thing, where the right shoulder is gradually forming at this point, and it's probably the 1.2265 could turn out to be the neckline of that reversal pattern, where the breakout retest of the structure will be welcoming an opportunity to join a bullish move. Well, besides this potential reversal pattern identified here is the breakout of the resistant line of that descending channel. So we saw the breakout of the resistant line happen right here. That was on Thursday. We saw the market came back to retest the structure, beautifully respecting our technical expectations of the breakout retest structure to join an uptrend move, and immediately price retested that resistant line of the descending channel. We saw an engulfing bullish candle that was on Friday to incite a move into that 1.22650 level. Now, with the way things are going right now, as long as price still remains above the resistant line of that descending channel, we will remain bullish on the GBPUSD. And in fact, we have an ascending trend line that we will be using to guide our trading decision for this week. And this is at this level here. I connected a series of higher lows since last week Tuesday. You can see our price at transition to find higher lows within this old structure we have here. So this ascending trend line is going to play a major role in determining if price will go up or it will go down. So if price respects this ascending trend line, we'll continue to look out for buying opportunities above the structure. But if price breaks down the ascending trend line, then chances are that sellers could come in to incite a downtrend move. Now, with the way things are going right now, it's important that we scale down into the 1 hour time frame so we can see how participants in this market have been reacting to that our key level at the 1.218 area since this new week began. So scaling down into the 1 hour time frame, we will begin to see things more clearly here. Now, on the 1 hour time frame, what I did here was to monitor the character of participants in this market at the beginning of the week, and I was able to identify a range. Though the week started on a very strong bearish and with a strong bearish engulfing candle, as you will see right here, emphasizing the strength of the sellers, and as that happened, we saw price confined within the 1.2 through 360, which happens to be the highest point price has been for this week, and the 1.220 area. Now, when we have a range like this, we exercise patience, waiting for either the breakout or breakdown of this range. And instead, what we saw here was the breakdown of the support line of the range, giving us a beautiful signal. Price came back to retest structure, a sharp rejection of that zone, and we saw this candle push price to the downside. So personally, I joined the bearish momentum at the 1.2200 area, and of course, I have since moved my stop loss to the entry point to secure my current sell position, just in case buyers come in to take over the market. And for those who took advantage of that opportunity, well done to you for being on standby to capitalize on that move. Now, if you had missed out on that opportunity, well, it's okay. The week is still very, very early, and there are still more opportunities for us to maximize here. So we're still not sure if the momentum will continue to the downside or not. But one thing for sure here is that we have a parameter here that we will be using to guide our trading decision for today, and that is this beautiful descending trend line. So after connecting the series of lower highs, we have this trend line marked out. So as long as price remains below this trend line, we shall feel comfortable in our sell position and look out for more selling opportunities below the 1.218. Now, there is a caveat to the structure here. Remember that on the higher time frame, we acknowledge an ascending trend line. Remember, after connecting the series of higher lows since last week Monday, we have this trend line here. Now, if the bearish momentum continues in such a way that it gets into this level, as soon as it touches this level, kindly move your stop losses again to secure your current sell position. Now, depending on how price reacts to this ascending trend line will determine if we are going to be adding more sell position to our existing trade or getting ready for an uptrend move. Now, if price breaks down and retests this trend line, the ascending trend line, we have no other choice than to join a bearish move, add more sell positions to our existing trade. But if we begin to notice buy pressure resume above the ascending trend line, like a double bottom structure, head and shoulder pattern, mark out your neckline, wait for the breakout retest of the neckline, then we join that uptrend move to the upside. So you can see how crucial this juncture is in this market. So I would advise us to exercise patience, allow our structures to mature before we jump into a position. So for today's trading session, let me highlight what we need today. We need this descending trend line, so mark it out on your chart. As long as price remains below the descending trend line, we feel comfortable in the sell position. And then mark this ascending trend line, where depending on how price reacts to that trend line will determine if we are going to be adding more sell position or getting ready for an uptrend. Now, in as much as price still remains below the trend line, this descending red trend line, we will continue to hold on to a bearish bias. However, in as much as we're looking out for selling opportunities, you know how we do it in this community, we also want to keep tabs with the opposite direction too. So what happens on this chart if buyers come in at any point in time to inside an uptrend move? Of course, we do want to be part of that move since price has been bullish, finding higher lows since last week Monday. Now, what is it that we want to see on this chart that will make us feel comfortable buying the GBPUSD? Well, for me to buy, if price doesn't get into the ascending trend line, for me to buy, I would like to see price break out, retest this descending trend line. A breakout of this descending trend line would be a beautiful sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. And if this happens, we are about to get ready for an uptrend move. Now, we are not getting too excited, neither are we having a buy stop order, as we will need some confirmations to happen before we jump into the buy position, as the breakout of this trend line could still turn out to be a false breakout. So to give me confirmations, I want to see a retest of the trend line or the 1.218, where the appearance of buy pressure above the trend line on our lower time frame will be welcoming more buying opportunities. And if price continues to climb up, a breakout of the resistance line at the 1.22360 will be welcoming more buy positions in this market. So you can see how that descending trend line here is going to be playing a major role in determining the direction of price action for today's trading session. So you do want to be marking them out. If price remains below the trend line, we feel comfortable in a sell position, and if price breaks above the trend line, then we want to be getting ready to buy. So these are my views on the GBPUSD at this point. So it's still looking both bearish right now, since price remains below that descending trend line. Now, don't forget the ascending trend line here, where I said we want to see how the market will react to that trend line to determine if we are going to be adding more sell position at the breakdown retest or joining a bullish move at the appearance of buy pressure above that trend line. So mark that one out too on your chart. So these are my views on the GBPUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while we also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, everyone. In the absence of no questions, I want to assume we are all on the same page, and all I have said so far has been quite explanatory enough. With that being said, here, let's dive right into the next asset, and of course, the last asset on our watch list for this week. So the next and last asset on our watch list for this week and for today is the XAUUSD, popularly known as the gold spot. This is my favorite asset, as you all know. And right now we are within a very interesting situation where any breakout of the structure is likely going to be inciting a phenomenal move. And of course, as technical traders, we want to be on standby to capitalize on this move. Now, what are we going to be doing to get ready for this move today? Now, the first thing we will do before we run through the current market structure on the lower time frame is to have an holistic perspective into what is really going on or what has really been going on in this market, at least in recent times. Now, the first thing I did here on the XAUUSD was to run through the daily time frame, where of course we all know that since last year August up to September, October, price action has been on an uptrend scenario. However, the way where price action is right now is at a very crucial pivotal point, which I will be considering as my key level for this week, and that is around the 1,810 and the $1,800 zone. Now, if you look at how this level here, or the zone, if you want to call it, has played a major role in determining the direction of price action since May of last year. Now, look at what has been going on in this market in the last 14 to 15 months right now. We saw how the 1,810 level was initially a buying niche in the month of May. We saw what happened here in the month of June before this level was broken to the downside in the month of July. And throughout the months of July, August, September, October, November of last year, we saw our price remained below that 1,810 level to emphasize the strength of the sellers at that point. Now, fast forward to December stroke January of this year, we saw our price broke out of that structure, and since the breakout happened, price action had remained above the 1,810 level throughout the course of this year. Fast forward to the month of March, you will see we saw a retest of structure leading price into its highest point, and despite the strong bearish momentum in the last couple of weeks, we can see how sellers have found it difficult to break through that area as price action closed exactly above the 1,810 level at the end of last week's trading session. Now, you will agree with me that we are at a crucial juncture in the market right now where price is currently around and above that 1,810. Now, if I zoom into that area here, you will see that as soon as price tested that area, we saw buy pressure resume around that level. Now, let's take a technical dissection of that structure above the 1,810. And to do that, we want to scale down into the 4 hours time frame. Now, on the 4 hours time frame, I was able to spot a beautiful simple setup here, which looks more like a reversal pattern, as you will see that despite the strong bearish momentum we witnessed in this market in the last 3-4 weeks now, we saw how it had become difficult for sellers to break through the 1,815 and the 1,810 zone, which happens to be our key level for this week. Now, the inability of sellers to break through the 1,815 and the 1,810 zone for me is a concern that buyers are likely building up some momentum behind the scenes here, hereby making me to label this zone as a temporary demand zone, and of course a potential reversal pattern too. Now, considering the fact that we have a potential reversal pattern, you know how we do it. The next thing we want to be doing is to mark out our key level situated at the 1830 level, as you will see here. And of course, we need a breakout of this level to validate that reversal pattern. And look at what happened on Friday. Price broke out of that structure, and in fact, if you look at what is going on here, you will see that at the beginning of today, we had a very strong bullish gap here, which reveals the sentiment of the institutions who traded during the course of the weekend. Now, with the way things are right now, are there chances that price, when we look forward to a breakout, we expect at some point price will come back, retest the neckline to incite an uptrend move? Now, the question here is, are we likely going to be seeing a retracement back into the neckline before the uptrend move happen? Or are we just going to be seeing this old choppy situation go on here since the beginning of the week, transition into an uptrend continuation pattern to incite an uptrend move? Now, to have a better understanding into what is really going on within this old consolidation phase around the 1850, we would want to scale down to a much more lower time frame. Now, to do this, we'll scale down into the 1 hour time frame, where I was able to identify a simple setup that will be guiding our decisions for today's trading session. Now, look at what we have here. Since the beginning of this week, price action had remained confined within the 1855 and the 1846 level to emphasize the level of indecision in this particular market. And of course, you know how we do it in this community. When price falls into this kind of range, we want to exercise patience, waiting for price action to either break out of the resistance line of that range to give us an opportunity to buy, or break down, retest the support line of that range to give us an opportunity to sell. Now, what we're going to be doing here is just to exercise patience, of course, waiting for the structures to mature. Now, if price action will break down the support line at the 1846, then I want to be looking at a retest of structure to join this counter trend opportunity, probably back into the 1830. Remember, this is the neckline of the reversal pattern we identified on the higher time frame, where depending on how price action reacts to this neckline will be determining if we are going to be adding more sell positions at the breakdown retest of the structure to the downside, or get ready to buy if buy pressure resumes. We are transitioning into a double bottom structure or any reversal pattern you can think of to incite the uptrend continuation. So that is one way to look at this. So let's be ready for the breakdown retest of the 1846. However, if the contrary happens instead and price continues to find higher highs and higher lows, then I want to be positioning myself above the resistance line at the 1885 level to capitalize on a bullish move. In fact, if price will break out of this zone, this is the highest point price action has been for this week. A breakout of this level will have taken out all the sell positions around that area to emphasize the momentum for the buyers at this point. So this is my view here on the XAUUSD for today. So basically, our center of focus for today is simply between the 1855 level and the 1846 area, where we shall be looking forward to breaks out to give us a signal of what our next line of action will be on the XAUUSD. So it's a simple setup. So you want to be marking this level out on your chart, and let's be using it as a reference point to guide our independent trading decisions for today. I do hope I made myself very, very clear here. If you have any questions on the XAUUSD or any of the assets we've talked about so far today, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we draw the curtain for today's trading session. All right. So, in the absence of no questions, I want to assume that we are all on the same page. I see your comment 787. Thank you for checking in. 556. Thank you very much. I really appreciate your comments, of course. Well, in the absence of no questions, I want to assume we are all on the same page. And in fact, it has been a wonderful moment with you guys this morning as we were able to successfully take on four major assets today, which includes the US All Spot, the US Tech 100, popularly known as the NASDAQ. We also treated the GBPUSD and, of course, the XAUUSD, which is popularly known as the gold spot, and all of which we were able to identify simple setups using simple parameters such as trend lines, key levels, and chart patterns to gain valuable insight into their structure, and of course use that information to strategically position ourselves ahead of today's trading session. For those who joined us for the first time today, I do hope you gain one or two things from what we discussed here today. In fact, I encourage you to be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how this works, and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, I welcome you guys on board. So I look forward to seeing you all same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing so far, and at the same time get ready for tomorrow's trading session. I wish you all the best of luck today, and always remember, we don't want to allow impulsive behaviors to make our decisions. We already have a setup already on our chart. We've already marked them out. Let's allow them to mature before we jump into any position. So on this note, I wish you all the best of luck and hoping to see you tomorrow as we continue to monitor price action. Do have a wonderful evening, everyone. Bye.